Hey everybody, welcome to Trendy Trading. My name is Jonathan. Today I'm going to talk to you really quick before I continue to push charts out about analysis. Let's talk about some risk tolerance with you just really quick. As far as future trades go, if I put any kind of future trades out there that I'm looking at trading, I always trade a bracket trade. That means I have an entry, a stop, and a target always. So that's one thing that I teach my traders is how to find their stops and their targets. Very, very important. Equity trade, same exact thing. We're going to have some sort of bracket trade with a stop, an entry, and a target. And then when it comes to options, I feel like this is very important, but two very important things to understand. I am talking about intraday risk. I want to give you a quick example of how I do this. And again, there are a lot of different factors, but this really works out, I would say, most of the time. Okay, again, only intraday, and when I say that, all I'm talking about is when the market opens and right before it closes. Let's, for example, say that we're going to trade MU. Let's say that I am going to jump in the 77.5 calls, and I get lucky and I end up paying $3 for these calls. So that's $300. I'm going to buy two of them. Let's keep it under 1,000. I'm going to buy two, and my stop is going to be a simple $1. All right. So I look at the delta, and if you do not have delta up here, all you have to do is click right here. All right. It's going to be the option in Theos, go down to delta, which is going to be the third one there, click on it, and it's going to pop up for you. Take this delta, all right, and if your stop is $1, then you're looking at losing about $40 for every dollar that the underlying equity price goes against you. Now, I typically add $5 to $10 for that intraday trading just so that I'm not shocked. So if I take it, I'm like, okay, well, I'm going to lose about $50 if I get stopped out here. That right there in itself is enough to give me the confidence to take the trade. I remember when I first started and I was following people, I had no idea what my stop was. I had no idea to understand how much I could end up losing. But man, when you understand, you could really execute that trade with confidence. Now, here's the kicker. If you decide to keep that option overnight, guess what? Then you need to assume all risk. If you pay $300, you could wake up in the morning and only have about $5 left in that option. That is the truth. Anything you hold overnight, assume that you could lose it all. That's it. If you like this information, please give me a like, please retweet. Maybe it'll help somebody else out there. And if you have any other questions about it, please reach out to me. Have a nice day. Check us out at trendytrading.co.